In this video, I'm going to talk about the trapped traders trading strategy. Stay tuned, guys. Traders, a very warm welcome to you. Okay, so this strategy is a trapped trader strategy. I've done a previous video about a bull trap, but this is a more of a broad approach. This is kind of saying, you know what, we are capitalizing on people who are taking traditional breakout trades and are getting it wrong. So we are really utilizing the fact that everyone's piling in and then they're wrong, and their stops and their exits are helping us make money. So what are we looking for? I've got 3 charts to show you guys. I'm going to show you on different time frames because this is something, and actually honestly I could probably talk on this for hours because it's one of the cornerstones of, or the foundations if you like, of some of my most powerful strategies. But I'm going to give you an overview now, and we'll probably do some more videos on it in the future, and we'll do some examples and stuff like that. But I'll give you an overview of what you're looking for, and you know, if you want to go away and have a look yourself, and if you find some, then stick them in the comments below and we can review them. Maybe I can review them on video, all that kind of stuff. But this is the sort of thing where big money is made, guys. Big money is made if you can get this one right. So like I said, the idea is traditional strategy textbook stuff says you do this, you do that, you buy the breakout, you sell the break to new lows, and then it just reverses aggressively on those people and catches them right out. We've talked before, and if you haven't checked it out, go check it out, about the kind of my range break fake trade I like to take. Highs, lows, breaks out, catches people out, and then very quickly slams to lows. This is the trap. This is the guys that people get caught in. One of the very, very, very lucrative trading strategies that I've got in my arsenal. I adjust it a little bit and trade it a little bit differently depending on the conditions, but it's a good one. Okay, so let's look at this. We've got US dollar JPY on a 5-minute chart. And this beauty of this strategy is it works on any time frame. You just got to adjust obviously your stops, your targets, your expectations. Here we go. We've got day 1 here, sort of drive lower, a low put in. We have a new low put in, and then we have another low put in. And this just says, hey, you know what? We don't encourage any more sellers in. All the people who have sold this low are kind of not exactly doing very well. This is almost like a double trap because they've sold the prior day's low and they think they're doing okay. Unless they were quick and nimble in the scalping, that's fine. They've made some money out of it. But you know, there might have been stops out here. Maybe they've had another go here. Either way, we are causing the bears pain because it's popped straight back up very, very quickly. You know, not many candles to take out those highs again. And now we are up and we've trapped the traders. So how do you trade this? Now, if you're extra aggressive, in a way that I like to trade it is I like to say, okay, in fact, let me just move this because this little thing popping up isn't great, is it? Because I can't quite see what's going on. Let's squeeze it up a bit. There we go. All right, so you can either say, listen, as we go through this low here, I'm going to buy as we come back up through the prior low that was my kind of benchmark trigger area. Go long here. Stop below the low. If it's a genuine trapped out traders, it's going to rally. If it isn't, I'm going to get stopped. It's no big deal. I can take many of those because the risk reward, as you can even see just by eyeballing it, is many multiples, or the reward should I say, is many multiples of the risk. Another way that traders might take it, I've cleared out everything there, haven't I, with that? Never mind. The other way that traders might take it is they might say, okay, I will now then go as we break above a resistance. So I want to see the filter of the trap traders. So people getting caught going short into new lows, people getting short going to new lows, and then I take the long as we break through resistance. Now that's fine by me, but I think that you are leaving a lot on the table. However, the little caveat to that is, if you're looking for a multi-day move, then let's say you're trading on a 5-minute chart intraday, you're looking for a day trade entry, then that works fine. Because look, you're giving only 30 pips off the low, and if this thing reverses and carries on for a few days, you're going to get 200 pips. So the risk reward ratio is still there. So I don't mind that on a lower time frame. I'd say be a little bit cautious of it on a daily chart. Let's skip over to a little bit higher time frame. Crude oil, same kind of thing, guys. And crude oil honestly, crude oil just traps people left, right, and center. It amazes me the amount of people that are still trading the traditional kind of way with crude oil, when it just will rip your face clean off. I mean, it's quite quiet at the moment, relatively speaking. You go back years ago when it was really swinging, and this thing would just it would just monster along. And if you're a crude oil trader, you're going to know this, and give it a thumbs up if you know about how crude oil can really move when it wants to. So the same kind of theory here, guys. We've got kind of a low point here, a bit rough, but you get the point. People are going short on this day, kind of midday or early in the morning, yeah, around 11 o'clock UK time. Going short, expecting a collapse perhaps back to $50, whatever it may be. Very quickly it reverses on them. Not only does it reverse on them, it takes out the prior day's high and closes at highs. You know, that's a proper trap trader situation. So you want to be in when we're breaking back above this kind of 51 level. We've put the low in, we've reversed, we've come in. You're long above the 51 because it's come back above that low, which is around 51 here. Your stops below this low here, which is about 58, 20 pips, 20 cent stop, sorry, because we're on crude oil. You're long, you're looking for a multiple of your move. And look at this one. This one's not too bad because you've got basically $1 on that just on the same day. And again, if you wanted to use it as a leg in for a multi-day trade, then that's really good idea. I like that a lot. Final one, guys, very quickly. Gold. So we're keeping it kind of broad here. We had US dollar yen, we've had crude oil, and now we're on gold. There's your low here, and the same kind of thing. People are getting sucked in on that day. I've had a couple of days. This is quite a bit of a sneaky one, actually. In reality, you might have been pinged out if you were trading this and you didn't go in again. But you see the point, the concept. You break through the low. A lot of people get sucked into it, and then it just rejects it. It just says, no, you know, all you guys there are stuck now. This is gold on a daily chart, just to confirm that. And these people who are going short, expecting it to kind of crumble through 1200 or whatever it is, or break through to these lows here, now have to exit, now have to buy, and you're getting that kind of three white soldiers kind of move, indicating strength, and then subsequent moves, subsequent drive, and you've got, you know, good $100 move from that in not a long time frame really, when you consider what it's doing. So that's the concept of the trap traders, guys. And I know I've stuck with the breakout thing, and it does work with others. It works on pullbacks, but the idea being is it's flipping the textbook on its head. When everyone's piling into one side and it doesn't work, you want to take the other side. And the reason that this works so well is not necessarily because of that. It's because if you think the supply demand is shifted so much, when it goes below a low, if it's genuinely weak, it's just going to carry on a momentum breakout. You've seen breakouts happen, you see how aggressive they can be. But when it doesn't, and you don't get any new sellers coming in, they shut off, new buyers come straight in, and you see that instant reversal back up again. So good trade, I like it. Great little strategy, implement it if you feel you can into your current trading strategy and current methodology. As always, comments below, guys. Thumbs up if you like the videos, and don't forget to subscribe and hit the bell and all that good stuff for more videos from me and other traders on this channel. Good trading, take care, see you in the next one. Bye bye.